Opportunity is knocking as these sectors look to rally. Let's kick it off with the S&P 500, showing here the breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average is below 26%. This is where you see bottoms. We can go back and look and see October, there was a bottom. We can see near December, we saw a little bit of bottom. And look now, here we see late February into March, and what do you see this thing hovering right around this level, telling you that there is not much more downside, at least in terms of breadth. Now, price is starting to flatten out here, which is a good sign. Let's zoom out to the percentage of S&P 500 stocks above their 200-day moving average. Now, remember, when a stock or an index is below its 200-day moving average, it's considered to be in a bear market. So now you've got about 2/3 of the S&P 500 in a bear market. And of course, what you want to now look for is where this bottoms. Now, the good news was the percentage of S&P 500 stocks above their 50-day moving average. Now, in the 200-day, you notice how it keeps heading lower, and that's driving the major indice down with it. But let's look at this from a historical perspective, because you start to get a good idea of where opportunity is forming. And you can see here we are around 37%. And historically, look at where we see bottoms and opportunities. This could be a huge buying place, and let's keep going, because from a breadth perspective, have we seen the bottom? And maybe not. It could be very close. Let's look at the other technical indicators. Let's start with the relative strength indicator, RSI, and what you want to see is a number 40 or higher. And so right now, it's just dropping below 40. It looks like it's trending lower. So maybe we get a little bit further down. And that's why I headlined the show, Opportunity is Knocking, because we could be very close to seeing, some news events, some positive stuff coming out. And maybe that's all it needs to turn the tide. But you can see here, potential that this will come down a little bit more, maybe not get to completely oversold conditions, but you notice it's below 40. So potential, put this on your radar. How about the MACD? Now this is a little bit of a lagging indicator, but that's okay. Notice how the MACD, the black line, is below the signal line. So suggesting, potentially maybe a revisit of the recent lows here, just some little bit of downward pressure. And that's why, again, wanted to look for a bottom. And of course, we've got Momentum Timer Pro version 6, which now takes a look at the RSI, the MACD, and MTB's proprietary indicator. Looks at the positive and these two positive indicators out of the three. So still showing sell signals. If you want to see what Monday's report is, you'll need to sign up. I'll put a link in the corner and in the description below. It is free right now. So those on the list, when it does eventually go paid, will get a great discount. It scans a ton of different ETFs to help you quickly sort through and find opportunities. Let's look at the longer term indicators. Now, when you find a bottom, you want to see some sort of longer term indicator start to bottom out and turn higher. So far, price is below all the key moving averages. Momentum on them is still bearish. You can see price is heading lower. Momentum screens are heading lower. So for the moment, is it too early to say there's a bottom? I think we're very, very, very close here. And let's go and check out the charts, because now we're going to look at the 1 year, and we're not looking at 6 months, because there's really not much to see. We need to look at the 1 year, and you'll notice down here in this supply zone between these two purple lines. So we have an upward supply zone and a lower supply zone. Now you may remember, if it's up above, that means it's a sell zone. Below, it's a buy zone. And you notice we had one buying, or actually had 1, 2, 3, 4, and then price came down. And notice where we see the sellers are at on the 1 year chart or above, which suggests to me that we need to spend a little more time in the supply zone. And then you see the bottom kind of forming right here and some upward momentum. So that's why I think opportunity is knocking. Put this on your radar. Keep an eye out for it. But notice 21-day moving averages headed lower. 50-day, we got to cross through the 50. They haven't gotten a confirmation. So, from a longer term picture, this is bearish, but there could be a shorter term opportunity building here for you to take advantage of. Let's go on to the Nasdaq 100. And a similar story with the percentage of stocks above their 50-day moving average at a very low 17%. Now, when we see stocks below their 50-day moving average, you see a cross below, confirmation below, that means their momentum is headed lower. Doesn't mean they're in a bear market, it just means they're headed lower. So you see that most of the Nasdaq's below its 50-day moving average. Again, you're looking for opportunity. But again, price keeps heading lower. So what this is telling you is that some stocks are reclaiming their 50-day moving average while others are falling below it. But how about from the 200-day moving average? Look at this, 19%. I mean, these are where you find historical buying opportunities, and notice how it's keep heading lower. So more stocks in the Nasdaq 100 are falling below a 200-day moving average, entering a bear market, and there's not many of them left to get down there. And from a historical perspective, you can see when it's gotten to this level or even below that, you've had some wonderful buying opportunities. Again, that's why we're headlining opportunity is knocking. Let's take a look at the RSI. It's under 40, so it could potentially get a little bit lower here, so you want to keep an eye on that. And of course, you've got the MACD. We see it is below the signal line. So, but again, it could take just a couple of days for this to switch. Could be just, some positive news, could be perhaps a couple more down days just to find some buyers, and everything switches over. Of course, Momentum Timer Pro, 4 consecutive sell signals based on the best 2 out of 3 signals. And if you sign up, you can find out what's coming Monday and every day to help you quickly identify opportunities. Price is bearish across the moving averages, meaning they're trending lower. Momentum, we see now a little bit of bullishness on the 21-day, positive sign below all the key moving averages. You want to see eventually here start to pop above the 9 or the 21, and that's telling you, more of a bottom is now forming. Still, through the 9-month price levels, momentum is negative. Let's go and take a look at the Nasdaq 100 here, the QQQ, and notice sellers are above here. So we have two very tightly controlled supply zones. And you'll notice when it gets into the supply zone right here around in the 335 range, sellers, boom, drive it right down. But notice how close the buyers are below it. Again, suggesting to me that perhaps either any sort of news to drive it back up here, flush out those sellers, or we see continued selling until the buyers finally work out all of the people who want out. Notice again the 1-year volume profile above, 21-day moving average head lower, the 50-day moving average head lower. So it needs a bit of pickup here, but there's opportunities. 1, 2, 3 zones people have bought in this area. Maybe there'll be a 4th, potentially a 5th. But again, opportunity here is on your doorstep. Let's take a look at the Russell 2000, perhaps giving us some positive indicators that the large caps will head higher. Remember, where small caps go, large cap follow. Here we see the percentage of the Russell 2000 above its 50-day moving average at 30%. And notice how it's moving higher. And that's good because what it tells you is more of the Russell 2000 is reclaiming its 50-day moving average. And that becomes bullish. Now, price isn't reacting to it yet. So it's almost as more cross over it, some fall below and head lower. Now, let's take a look at the percentage of Russell 2000 stocks above their 200-day moving average. It's around the same level of 30%. And it is unchanged. So every time one crosses above, another crosses below, and that's holding price going sideways. Again, this is pretty good sign because you want to see now more of the Russell 2000 reclaim the 50-day moving average. And looking at throughout history, tremendous buying opportunities. You can see all these different levels have created opportunities to get in. And now let's take a look at the RSI. It's building. It went from oversold. It has reclaimed that 40 level, that critical 40 level, came down here, bounced off of 40. So that's a good trend from a momentum perspective. You want to see the RSI heading higher. Doesn't have to shoot straight up, but it just needs to hold that 40 and keep going. How about from MACD? We can see it. The MACD line is above the signal line. That is a positive confirmation. So we already know what Momentum Timer Pro is going to tell us. We got 2 and out of 3 is all we need. Now you'll notice that momentum here is pretty weak. Again, all it just needs is a little nudge higher. Could this break down over the next couple of days and maybe give another bottom here to come in if you're looking at this? Sure. And again, we see 2 consecutive days of buy signals on Momentum Timer Pro. We would know that because, of course, at least the RSI and the MACD are confirming that. How about price on the moving averages? They're heading lower. So we want to look to see if these are starting to flatten out. And we want to see it start with a 21-day. Momentum is just bullish on the 21-day, so it's a good sign. Below all the key moving averages is not good. Momentum all the way through the last 12 months is negative. Not good, but it doesn't mean there isn't a bottom forming here. And that's what becomes obvious in these charts here. As we look at IWM, look, what's happening here is you can see how bottoms are formed, and they are a process. And notice the 21-day moving average, I'll hold my mouse over it just so you can see it, it's starting to flatten out, and that is a good sign. And so the 50-day moving average is coming down. So what would we expect to see here from a price perspective is price come up and probably reject against the downward trending 50-day moving average. And that would be a-okay. In fact, that would be a positive signal because it would come down and allow buyers to come in and establish this as a bottom. And then you'll see the next time it'll try to break the 50-day moving average. And rarely does the 50-day come down and just shoot through it. And it happens, but it's not as common. So you see kind of a nice bottom forming here. And that is exactly what you want to see in the charts. All right, let's go on to the high yield bond market, because this is where perhaps if there's any risk, you see it in the high yield bond market. If you missed Saturday's show, go back and listen to that, where we talk about the yield curve and the risk in high yield bonds. And what do we see here? RSI at 31, so heading down to potentially oversold conditions, which is at 30 or below. So that's a good sign, suggesting that perhaps price may be bottoming here. How about the MACD? We see a pretty sharp divergence between the MACD and the signal line as it heads lower. So you'd want to see price start to form a bottom before you got too excited about this. But this, could be either, if this keeps going lower, watch out for the major indices. If it starts to bottom, positive sign. Price bearish, momentum bearish below all the key moving averages. Momentum's broken across all the charts. Let's take a look at HYG, because this is going to make or break it. This is what you should be watching more than anything. And notice how this thing is just spiraling down. Even on the 1-year chart, we can go to the 2-year chart. You can see sellers way above here. And now we're starting to encroach in levels, if we keep zooming out, that when they break, you can look at this last 5 years, you've only got support at one place back there. And then if you count after, of course, the pandemic, as the market kind of recovered there's not a whole lot. Well, there's a little bit of support here. There's not much here. If you zoom out, here's where the risk starts to get into play, is if this continues to break down, now the whole equity market is coming down with it. So your focus this week should be on HYG, potentially looking to take an opportunity in some of those other major indices. And of course, keep your stop losses tight in case HYG breaks down. And with that, I'm Steve Van Metre. Thanks for watching. We'll be back soon with the next chart show for today. Content of this video is provides educational information only. It's not intended to provide investment advice. This channel is not to be construed as recognition or solicitation by any security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steve Van Metre. Personal capacity. Business express this video that I do not affect the view of Atlas Financial Inc. or Steven Van Metre Financial.